Welcome back. KPIT Tech is the next management on the show. The revenues came in flat at $181 million. Caresoft and Endream contributed about 3.4% to the company's top line. But the company is also guiding for better growth in FY27 compared to FY26. Sachin Tikekar, joint MD of KPIT Tech, is now joining in. Mr. Tikekar, morning, and thank you very much for joining in. While your overall constant currency revenue growth in Q3 was 1.5%, you did say that the acquisitions contributed 3.4%, which means the organic revenue growth, the growth ex of acquisitions, was negative for the second consecutive quarter. What can we expect in Q4 in terms of organic revenue growth? Will it continue to decline? And what exactly is the reason behind this continued softness?
Okay, thank you, and thank you for having me. Let me take questions one by one. So first of all, you're right. The calculation about the quarter-on-quarter growth. The degrowth, actually, if you take out the joint business that we've been doing, is actually to the tune of less than 1% for this quarter. And as far as the future is concerned, we believe our Q4 is going to be our best quarter in terms of growth in revenue. We also feel that there will be an uptick in our margins as compared to Q3 in Q4. But more importantly, we feel that FY27 is going to be better than FY26 for us. And given the transition that the whole mobility industry is going and the way we are trying to transform our company, we remain very bullish on the midterm.
Okay, got that. You said Q3 degrowth was less than 1% if you remove the joint venture business?
No, if we remove the programs that we've been doing together with the acquired entities over the last 2 quarters.
Okay. So when you say that Q4 is going to be a best quarter in terms of your revenues, should we at least firmly say that it will grow, organic revenue will grow in Q4? If yes, could it be 1 to 2%, 2 to 3%? Give us some indication, because the first, yeah.
There is going to be growth in Q4 for sure. Like I said, it's going to be the best quarter for this financial year. There will be growth. We don't provide very specific guidance for the next quarter. So all I can say is there is going to be growth, and we're going to be in the positive, and there is going to be growth coming back in Q4. And I think the margins are likely to be better in Q4 as compared to Q3.
Okay. Got that. Last time you also spoke about an impact. This was in Q2 because clients are deprioritizing certain spends from their old program. There was also a revenue loss due to cannibalization. This was in Q2. Has something similar happened in Q3?
Yes. See, it's a complete transformation in the business. So just to put things in context, the mobility industry, on an average, the revenues are down more than 10 to 15%. In the mobility industry, the profits are down by 50%. And so far, we've been able to hold on to our margins, whereas most of the others in the entire ecosystem have not been able to hold on to the margins. So it's a big churn that we've been experiencing for the last couple of years. The good thing is, I think things are getting stable now. I think the OEMs have a much better handle in terms of what their markets are and where they really want to spend money, which is a good thing. And those are the early signs of some green shoots that we are seeing. That means they will deprioritize their spend in a bunch of areas, but they will prioritize spend in some of the areas. And we've clearly identified which those areas are, and that's where we are actually engaging.
But last time you specifically called out a number of $65 million as revenue lost because of these 2 things, deprioritization and revenue cannibalization. Is there a similar number in Q3?
It's a similar number in Q3, and we believe it will continue because it's a complete change from a services model to a solutions model, which is going to be AI infused. This is something that is going to happen. In most cases, we are prioritizing cannibalization of our competition. But in some areas, in order to help our clients do more with less, we also have to cannibalize our services business so that we can offer them solutions that are cheaper, better, and faster to implement.
But those, Sachin, hi, morning. Those services are also, the solutions are also services, right? But of course, in a holistic way. The way you offer them is different compared to how you would do earlier.
Yeah, so services are very linear, and solutions are at least 50% non-linear. That's the difference. That's how you're able to shorten the time to market substantially, and also provide.
What is the difference, Sachin? Services and solutions?
Services are linear in the sense you do a project and it's a human effort for the program. And when you have solutions, there are a lot of reusable components that are readily available. Hence, you have a head start of minimum 50%.
I see.
Right? That's the fundamental difference between solutions.
But wouldn't the recurring revenues on the solution side be lower then?
See, the effort is to take a bigger view of the client's problems end to end. And the effort is to solve the bigger problems so that the revenue doesn't go down, but it makes things more efficient for the clients. And at the same time, we don't compromise the revenue. And hopefully over a period of time, the margins also go up.
Okay.
That's the effort.
The deal wins, Sachin, this time around about $200 million. Average has been about $230, $240 million.
Yeah.
So is there a bit of a slowdown here, and why?
Well, I won't call it a slowdown. It's about 10%, little bit off. And it's not a slowdown, 10% is just pretty normal. The order book is pretty solid for as we walk into Q4 and as we look at next FY 27. There are no specific reasons for the drop. I think we'll have a little more balanced growth as we get into FY 27.
Okay. Hi, Sachin. Good morning and good to see you in. Let's focus on a couple of your verticals then. The US vertical as well as the Asian vertical. Now, in US, you saw a bit of a degrowth. When does the United States business recover? Point number one. And on Asia, we were talking about incremental business coming in from some other countries. But it's degrown yet again. What happened?
US, first of all, is stabilizing a lot more. That's where there were substantial cuts in terms of the budgets. And what we are doing in the US, why we feel a little more optimistic about US is our business in trucks and off-highway is growing in the US. So it's not just the dependency on pass car anymore. So we feel pretty good about US coming back to growth in Q4 and, the early part of next year. In terms of Asia, I have to say, we'll see growth in India and China. We'll see growth in Southeast Asia. I think it's just a couple of large programs getting over. That's why I think there is that adjustment that we have to go through in Asia. And Asia will go through that churn for some time, but net, I think we should see growth in Asia as we get into next financial year as well.
Margins declined by 50 basis points. Could you give us a breakup of that? Because last time when we spoke in Q2, you were hopeful of managing to maintain your margins despite the increment, but that's not played out. Margins have dropped. And in Q4, what could be the extent of margin improvement?
So let's break up the 0.5% drop in the margins. More than 0.3% is on the account of wage increments that we did. And the rest of it is just the regular business churn. And as I mentioned earlier on, compared to this, we expect the margins to go up in Q4. It's kind of hard to be specific in terms of how much, but all I can say is there will be growth in margins as well.
You said, I think you said mobility industry revenues are down 10% and profits are down 50%. Is that correct?
You look at all the global OEMs across the world, their profits, and you look at the ecosystem of all the tier ones and all the tool makers, there is a dramatic drop year on year. I think the only outliers in terms of growth are the companies based out of India. I think Mahindra has done really well. So has Tata Motors comparatively and Maruti. But that's not the story when it comes to our clients in US, Europe, Japan, or Korea.
So for your clients, what is the expected tech spend?
The tech spend
for your clients.
It went down by about, on an average, about 20 to 25% in the calendar year 2025. As I said, we don't expect the spend to go up net. However, as I mentioned earlier on, in some specific areas, areas like digital cockpit, areas like cybersecurity, then propulsion and after sales and diagnostics, these are the areas where we think that the spend will be greater. Even in some parts of the world, the navigation on autopilot is become a necessity in most of the vehicles now. So that's where we expect the spend to go up a little bit. And, those are the areas that are well within, what we specialize in.
Thank you very much, Sachin, for joining in. Always a pleasure chatting with you. That's KPIT Tech, hopeful of a better quarter, Q4 in terms of revenues and margins, and even FY27, though the industry outlook is pretty tough still.